everyone, my name is Marcello Colax. I am the Managing Director at Clever Markets and you are watching the Energy Outlook for the week starting 28th of April 2025. We at Clever Markets are your trusted partner in implementing best technical analysis practices in-house. So if your team is ready to take advantage of best TA practices, just go to clevermarkets.com and send us a message. Of course, before we go into any details today, here just a disclaimer. Everything you see here is just my personal opinion and of course not direct trading advice. Alright, so let's just jump right in. Every weekend I ask my energy trading network what they think where the market might be going next. What we see for this week is a stark increase in the share of bearish traders. You can see last week it was more mixed. This was mainly due to the Easter break that saw lower volume, and this was also reflected in the poll that was reasonably balanced. Now, however, we see that the bears are more in charge, which was also reflected in last Friday's market action, where we broke below quite a few important support levels. This morning we are also starting out the week rather bearish for the key markets TTF and NBP front season, whereas German power and EUAs are still rather neutral, but there is a good chance for the market to top out. So you can see overall there seems to be some good agreement, and with volume expected to pick up again this week, it would be interesting to see if the bears are pulling through, because we are hitting some quite important support levels. So it remains to be seen if all of these are just going to be smaller bounces or a full-on trend reversal. To be honest, I think we are just in for a little bit of a bounce before the bears continue. In case you're wondering what this here is, well, that is part of the Clever Markets dashboard that our clients have access to. Okay, let's move over to the charts themselves, and I will make myself very small. Okay, so what we're seeing here is the TTF front month, the NBP front month, TTF and NBP front season. We have EUAs, we have German power, we have Henry Hub, and we have the Brent markets. So all of them you can see we are continuing lower. So this is what I meant. So on the TTF and on the NBP front month and front season, we started making lower lows. So we are continuing that, and the highs of course remain lower. We are not that advanced on the EUAs and on the German power. Here we are just gradually making this peak that seems to be forming out, and the bears will only continue below these troughs. So there's still quite a bit of room to go. Usually it is the TTF that is leading the pack, so I wouldn't be surprised if the bears on the two German and EUA markets are pulling through as well. On the Henry Hub, on the net gas, we see that the bears are not as much. I mean, they're still very much in charge, but we are slowly seeing that bearish exhaustion is setting in, with the past few candles not being as steep anymore, and we are slowly tapering off. Not so much on the Brent market, where we saw after a steep decline, when was this, on the 9th of April, we saw this steep increase. Now we are topping out here as well, and the market really isn't going anywhere, so I want to see this range play out, and that is best observed on the intraday charts. Now let's get started with the TTF front month. So on the weekly chart, we are still faced with the same realities as last week. So we had this break below the broadening wedge a couple of weeks ago, and the bears for now are continuing lower. There was always a danger that we might get a pullback before the bears continue, like a pullback towards the broadening wedge, but that didn't happen, and we are as expected, and we are now continuing lower. Now here I want to point your attention towards the firmly bearish momentum as well as the firmly bearish trend tools, and also there's no indication of the market bouncing anytime soon, with the stochastic being firmly in oversold territory. So in the stochastic, for example, we would only get a bullish bounce signal if we were to push above the 20 area here out of oversold territory, but this isn't happening yet. And anyway, we do not make any trading decisions on the weekly chart. For that we use the daily or hourly chart in our case. So here I just want to zoom out a little bit onto the daily chart. We are now dealing with this newly instated channel that I might have spotted way too late, to be completely honest. And there are a few variations I want to make you aware of in just a second. But the important thing is, no matter what line you draw onto the chart, one thing remains firm. It is always these horizontal peaks and also this 200-day exponential moving average that remains the key levels to break. And also you can see we are working with this fib extension. So after this down leg, we saw a correction and now we are continuing lower. So you can see down here at 22.5, we would then, if we reach the market here, that means that this down leg after the correction is then extended towards here. And zooming in, we understand that the 61.8% fib retracement is offering support at 31.29. So that's why I'm saying we broke past this important level. There was a little bit of a range forming here, right? So we broke below 32.55, ended there last week, and now we are heading towards 31.29. It's interesting because having these two very firm support levels stacked one after another, it can at first lull the bears into a false sense of security before being stopped out. So be very careful. I want to say below 31.29, I think there's not much stopping us moving towards 27.85, but I want to see it happening. The bearish sentiment would be wrong if we start pushing above this peak here, 35.93, and which would also probably lead to a move above the channel. How high it can go then? Well, probably towards the 200-day exponential moving average, but with all the tools being reasonably bearish, so trend tools are bearish, the momentum is bearish here, it's firm, yeah, so it doesn't mean it is weakening. For now it is maintaining. We do see that on the DMI the bears are firmly in charge, and there's no indication for any bullish signal on the stochastic as well, because we are still well below the 20 level. So everything this morning might point towards more losses. Now here's the thing. Over the weekend, the bears might have cooled off at least a little bit, so maybe a little bit of moderation before continuing lower is absolutely fine. Okay, now I want to talk about the trend channel. So there's many things that you can do, but of course important are always these horizontal levels that are marked in line with the peaks and troughs. Now, here's the thing you can do, right? So you might not like the line that I have drawn in, so you might choose to do something like this. So then it is not a channel anymore, but it's more a falling wedge. And this falling wedge here is connecting this point and this point. So it's only 2 points connected, not that firm, but we have two really neat points also towards the bottom. And what these falling wedges are showing us is that the market is still moving lower, yes, but into an increasingly tighter range, which is often a sign of bearish exhaustion, and the market is more likely to break higher. And we would get our first bullish signal if we get 2 consecutive daily closes above the falling wedge, right? This would be another way of seeing this. Or you could just stick with a falling wedge like this. So now we are marking out these 2 peaks, yeah? So we are not taking this peak up there anymore, we're taking these 2. The idea remains the same, falling wedge eventually resolving higher. Or you can just go with the channel that shows no signs of bullishness, and it's just the market continuing lower with a flow of lower lows and lower highs. Now the question is, which one is the right one? So that is a red herring. They are all perfectly fine. None of them is more confirmed than the other because they're all just dealing with like 2 connection points right now towards the upside, which is the more important one than the downside right now. The only question you have to ask yourself now, will I act on a line break? These chart patterns are only meaningful if you actually act on them when they are breaking. And you can see when we change the angle, then also the breaking point would change marginally, right? So the question you have to ask yourself right now is, would I close my shorts or maybe even go long if we push this morning above, I don't know, maybe 35, yeah, or 35.15.3? Would I turn bullish above this point? Yes or no? Or if you take this a little bit closer again, there you go. Let's take these 2, right? No matter if let's say there's a channel now, not a wedge. It can be a wedge as well, doesn't matter, right? Let's turn this into a wedge, why not? Will I turn bullish above this level here? 37.8 maybe? What is this? 38 I want to say, right? Do I want to wait until here? So these are the questions you have to ask yourself. For me, I think either is fine. I don't have a preference. I happen to go with the channel right now. And this here, the 35.75, this is the one level that would actually make me sit up and reconsider my short position. And then I would get the final confirmation if we are actually moving above the channel, if we choose to draw it from here, right? So we can also draw it from here, that we are connecting this peak and this here, right? So this is also possible. There you go. This is a little bit tighter. And here then the question is, do I want to turn bullish, or would I abandon my bearish position above 33.8 essentially, right? Would I want this? Because we're there, we're almost already there. So this is quite tight already. So these are the questions you have to ask yourself. So now, how do you trade this? Okay, one more thing I definitely want to add here. Sometimes when we get a channel that is like so close, then a move above the channel here, traders might choose to close any short positions, but they wouldn't go long yet. And they would then choose to go long as soon as we push above 35.7, which is this peak here. Now, in the other scenarios that you just talked about, we see that we would first get a higher peak before we break the channel. So here the roles would be somewhat reversed. You might choose to get out of your short position here, but only go long as soon as we push above here. To be honest, upside, I don't really see it happening all that much. I mean, like significant bullish reversal, because everything is still firmly aligned with the bears. All right, let's have a look at the TTF front month hourly chart. So here we are also dealing with this descending channel, and we ended last week with really high volume on a couple of red candles here. So the downtrend certainly is in place on the hourly chart as well. We might experience a small bounce, not because the tools are telling us that, because you can see stochastic is not giving us a bullish signal at all. And I use the stochastic for the smaller candle signals. No, it is more simply because we have reached the lower end of this channel here. So a little bounce wouldn't be all too crazy. But ultimately, as long as we remain below 32.65 or make it or remain below the channel right here as well, I still think that the bears are more likely to continue. If we were to push above 32.65 and above the channel, then I would say the bulls will be given a chance. The bearish intraday trend would be undone. And for the daily chart, that would simply mean a delay of downside continuation. Alright, I hope you all enjoyed this market outlook. I'll be a speaker at the X Energy Exchanges conference in Athens on the 8th of May, and if you're in Athens, please do say hello. Send me a message at hello@clevermarkets.com. Maybe we can meet up for coffee. The week later, on the 14th of May, I'll be at Flame and I'll be hosting a technical analysis masterclass. So if you haven't signed up yet, or if you simply want to say hello, please do so. Get in touch with me, hello@clevermarkets.com. Everyone, have a good start into the week and see you around. Bye bye.